This is a lecture on management and managerial accounting. Now, as managers, whether you are managing a store or a department, you are managing activities, all kinds of different activities. But when you look at it, these activities can be categorized into 4 broad functional areas. To begin with, planning. You must plan the activities for the area in which you're responsible for. You must also direct the activities of the people who are working in that area. You're hiring them and you train them and you make sure they understand the plan and how to go about performing that plan. Then you must, on a day-to-day basis, continuously control activities, comparing what's being done to what you have planned. And then lastly, you are called upon to make decisions. So now we're going to look at each one of these areas in more depth. To begin with, planning the activities in the area you're responsible for. You're dealing in the future. You're looking ahead. Your objective here is to plan activities that will increase profits for the firm or company. What you have to do is add value to the business. Now, adding value means you must become either more efficient and or more effective in performing these activities. Now, when you look at management accounting, I want you to think of the 2 financial statements you learned in financial accounting. First of all, the balance sheet is a statement of the financial position of the company at one point in time. This is what the company owns, this is who it owes, and this is the equity that the owners have in the company. Now, those issues about whether to borrow or issue shares, those are managerial finance issues. What I want you to think of when you're thinking of managerial accounting is the income statement. Here we have Paul's Guitar Shop. Income statement for the year ended December 31st. 2 categories, revenues and expenses. Revenue exceed expenses, so we have a net income of $12,950. Now, this income statement is presented according to generally accepted accounting principles, as you learned in a previous financial accounting course. But I want you to take a look at this now and consider it a statement of operations for the year. And so now the language changes a little bit. In financial accounting, expenses were those things that were consumed to earn revenue, like rent and cost of goods sold and salaries and supplies. There's only one definition of expenses, but in managerial accounting, we talk about costs. We do not refer to expenses as much as we refer to them as costs. And as you will learn in this course, we have about 8 to 10 different definitions of costs. We talk about net income, but we refer to it as the bottom line. So here for the income statement, you have the revenues minus the costs and the bottom line. Now, when you look again at the statement of operation, the revenue section is what the company produced and sold. It's the level of activity they achieved through the year in terms of sales. So that could be considered the output for the organization. And I want you to think then of the costs now as input into producing the output. So the operations is a statement of inputs and outputs. Now your role here is to add value. So now you can see that by determining the efficiency. The efficiency is determined when you get the same output with less inputs. You're being more efficient. Effectiveness means you are getting more output for the same amount of input. So your role as a manager is to improve on efficiency and effectiveness, i.e., you add value to the firm by increasing the efficiency and the effectiveness of the activities you manage. So that's your goal in planning. Now, in directing, you are coordinating the activities of the people you are managing. You're making sure that planned objectives are being done. You're providing incentives and motivations. You hire and train employees. All of these are very important issues, but they're not issues that we address in this course. This management function is more related to your particular area of expertise, and you cover how you hire and motivate in other courses. The third area now is controlling the activities of the area you're responsible for. Here you must make sure things are being done the way you plan. Are the goals being met? If not, what do I have to do to fix it up? This is all about performance evaluation. How well am I doing? So these are controlling activities, and you do this on a day-to-day basis. And lastly, remember, about good decision making is a function of a good judgment in planning, directing, and controlling. Now, managerial accounting, this course, is a field of accounting. There's financial accounting and managerial accounting that provides economic and financial information, but to managers only, to people inside the company, not outside the company. And that is the field of managerial accounting. It's also many times referred to as management accounting. Now, the tools that you will learn in a managerial accounting course, the tools and techniques. Some tools are for planning, some tools are for controlling, and some tools are for decision making. So this course is a series of tools that help managers perform their roles as managers. The planning roles, as a planner, you must know your costs. Every manager must know their costs. If I'm going to double sales in the future, what costs are going to double? What costs are not going to double? How are some costs going to increase? And so on. So the tools you will learn is understanding cost behavior is a major tool. We start with that. From that, we develop a model to help us predict what would happen. It's called a cost volume profit model. Then we look at the income statement in a completely different way. We reorganize the costs in terms of the way they behave. We don't change the bottom line of the income statement. We simply reorganize it. We introduce what's called a contribution margin, and we do perform contribution margin analysis. And then lastly, budget planning. These are all tools designed to help managers manage the planning function. For controlling operation, the tools you cover in this part is, first of all, you must understand the cost accumulation systems like job order costing and activity-based costing. You will learn responsibility accounting. You'll be introduced to standard costing, and therefore you'll be able to perform variance analysis. You'll know how performance reports are produced, and you'll be introduced to the balanced scorecard. Lastly, in decision making, here you change your focus. You're not looking at costs so much as cash flow, cash in and cash out. And the techniques that will help you make informed decisions are: 1, identify your problem; 2, develop alternatives to solving that problem; and then apply these following techniques: incremental analysis and or differential analysis or relevant costing, and make a decision that leaves the company better off. Again, remember, your role is to add value. Now, as an overview of the management accounting or managerial activities you perform, sometimes you're gathering and presenting relevant data that you're going to use in making decisions. Sometimes you're evaluating different alternatives. You're assisting in profit planning, and you're formalizing budgets to predict the future. You're helping to control costs by comparing what you budgeted with what actually happens. And there are data for determining what capital expenditures to make. So those are some of the activities that are comprised of a managerial accounting profession, if you will. Now keep in mind that what we're going to be talking about is manufacturing companies. They're the most complex. You've learned to do financial accounting for a service. Manufacturing is or merchandising is a little more difficult in journalizing because you have inventory. But the activities in manufacturing, you have many different costs because you manufacture the product you are selling. So what we talk about in managerial accounting is not just for manufacturers. It is for service and merchandise. Any organization in which managers are working to plan and control, whether it's profit or non-profit or government. Now, the two fields in accounting are managerial accounting and financial accounting. Now, they're both similar in that they deal with economic events, and they classify those events and communicate them. But that's where the similarity ends. They're quite a bit different. Financial accounting is about the history. You're recording what actually happened. And you're doing that for people outside the business. So you're following generally accepted accounting principles. Managerial accounting is mostly about the future. And you are reporting not to people outside the business, but to managers. And you're doing it quite often. Not just quarterly as you do in financial accounting. You're doing it as needed. And you're reporting on subunits within the business, not the business as a whole. So those are some of the differences. Financial accounting is governed by generally accepted accounting principles. What we are governed with in managerial accounting is whether or not this data I'm using, this information I'm using, is relevant to the problem at hand, or do I need it to plan or to control. So therein is the difference. Managerial accounting is quite different than financial accounting. Think of managerial accounting as a toolbox, a series of tools that managers themselves have developed. And you will learn not just the tool, but how to apply that tool. And you'll be given a number of different business situations. You have to know what tool would help you analyze that situation, and you'll have to demonstrate your ability to use that tool. And we're talking about a course, a typical course where you will learn between 10 and 12 different tools. So it's a very interesting area, and I hope you will enjoy it.